In this video, I'm going to be talking about trading Forex and how it works. So if you're new to Forex and you want to learn more about it, stick around. What is Forex? The foreign exchange market, also known as Forex, is the trading of one currency for another. Here's a little description by Investopedia. The Forex market is the largest, most liquid market in the world, with trillions of dollars changing hands every day. The Forex market has no central location like there is with the London Stock Exchange or the New York Stock Exchange. Instead, with Forex, the market is an electronic network. It comprises mostly of bankers and brokers, as well as institutions and traders. How does Forex work? Forex is often known for changing one currency for another at your local bank, such as when you go on holiday and you want to change your currency to the currency of the destination you're going to. However, for traders, Forex also involves trading the value of a currency against another currency on the foreign exchange market. For example, if one currency is stronger than another currency. When trading currencies, they are listed in pairs, such as GBP USD, Euro USD, and GBP JPY. In greater detail, these are the Great British Pound versus the United States dollars, the Euro versus the United States dollars, and the Great British Pound versus the Japanese yen. There is also a price associated with each currency pair. So for example, let's use Great British Pound to the US dollar. If the price associated with Great British Pound to the dollar is 1.21793, it means that it costs $1.21793 to buy just one Great British Pound. If the price increases to 1.22011, then it now costs $1.22011 to buy one Great British Pound. In effect, the Great British Pound has increased in value and therefore the United States dollar has decreased because it now costs more dollars to buy 1 pound. This is the basic idea of how currencies work with each other in the foreign exchange market. Here is an example chart for the pair, the Great British Pound to the US dollar. And as you can see, just looking very basically here at the chart, you can see that it has been making a gradual increase, which means that in this specific fraction of time we're looking at here on the chart, the Great British Pound has been increasing in value against the US dollar. On the right hand side here, you can see that it says 1.32508, and that is fluctuating up and down as the price is changing, and that represents the value, the amount of dollars it is worth to buy one Great British Pound, as we mentioned before. Here are some key insights for trading Forex. The Forex market is open 24 hours a day, 5 days per week, across most of the financial centres around the world. This means it's really accessible to trade Forex, as you can buy or sell currencies at any time of the day during the week, whether you're in America, Europe, Asia, or Australia. Forex is the largest market in the world. It's very liquid and it provides a lot of opportunities for trading. Prices fluctuate based on different factors around the currency that you are trading, such as economic and political factors, as well as other technicals. In the Forex market, currencies trade in lots, which is a term used to describe the position size that you take for a trade. I'm going to be talking a little bit more about lots in a future video, as well as other factors relating to Forex and trading. I hope you've enjoyed this short introduction into the foreign exchange market. If you have, be sure to hit that like button, and if you're not already subscribed to the channel, hit the subscribe button below, and I'll catch you in the next video. Thank you. Bye.